But let's just dive right on in. No, nothing else. So I'm gonna be showing you guys. You guys know I'm gonna actually be trading. I'm gonna show you on NQ and I'm gonna be showing you on gold. Okay. I was watching gold. I was looking at gold this afternoon, just watching the price action and seeing how it was moving. And I'm like, wow, these the trades or the setups or the plays that I'm actually looking to take positions on. Gold is actually doing amazing. Gold is actually performing price action wise a lot better than NQ is lately. So I'm going to be showing you guys examples on gold and I'm going to be showing you guys examples on NQ. All right. And in this lesson, it's going to be all about identifying key levels and how to help us pick a direction and how to help us be able to hold the trades longer and to truly know where we put our stop losses and so many other things as well. Okay. So let's start just diving on in here. Now, I'm actually going to be ignoring the 4-hour, the 2-hour time frame. Okay, we're only going to be focusing on the 30-minute time frame, the 15-minute time frame, and lower. All right, guys. So first things first, we're actually going to be getting rid of, you know how I usually draw my lines like this, right? And I just put the key levels like that and that and that. I'm going to be showing you guys today, and I'm actually going to start, I mean, I don't truly use it, but I'm actually going to start using it because I think it's going to help you guys in the mornings with the live trading. And I think it's going to help, obviously, you guys truly get better entries, better stop losses, and better take profits. Okay, so we're not going to be using these lines. Okay, we're going to actually be using zones. And I kind of been slowly touching on this in past lessons. But in this lesson tonight, I'm going to be really diving in and going really in depth with the zones. Okay, and truly, zones aren't super different than drawing just regular lines. But again, they're going to help you be a little bit more accurate if you guys are still always struggling with that. Okay, so when we draw a zone, I'm going to go ahead and go to the 5-minute time frame. I'm going to zoom in on here. Okay, so originally when we used to draw levels, we would just put, okay, cool, this is a clear level of resistance. We just put a line like so. Okay, but if I put a line like just like that, right, look what happens. You guys can get confused and be like, oh, hey, it never really touched this level of resistance. Is that still valid? Should we even take that trade? Does this make sense, right? Or the same thing here, if we put a level of support here or even a level of support here, it's going to be like, well, hey, does this truly make sense? Oh, look, we broke. And then this can get a lot of people in trouble by just drawing lines, okay? So to draw zones, what we're going to want to do, depending upon if you're on TradingView, if you're on Thinkorswim, even if you're on Tradeovate, it is being recorded, Raphael, it is. You want to obviously use the rectangle box, okay? You can use it on pretty much any software, TradingView, Thinkorswim, Tradeovate, and you're just going to open up the rectangle box now, and this is kind of what it looks like. There's a rectangle box. It really depends upon what you guys are looking for. You guys can change the color if you want to. I kind of like it as a white gray area. It's not like too much in your face. It's not too like, confusing. It's kind of just in there. So how we draw our zones. Again, this is on the 5-minute time frame. Well, first things first, you guys obviously have to know key levels and support and resistance. That's the first thing. If you guys don't know key levels and support and resistance, I actually might, tomorrow's Wednesday. I think tomorrow's lesson, we're just going to go kind of really back to the basics. It's never bad to kind of go back into the basics, break down the basics, and kind of go from like when we first started trading, because it's never bad to refresh. It's always good to go back in the past. So that's what we'll be talking about tomorrow's lesson. But did you go live AM? Yep. Alf, I hope I pronounced your username right, bro. Yep, we live every single morning, 8 a.m. Central to 10:30 Central. I know you just joined the team, so welcome. Glad to have you here. If you have any questions, reach out to Scarlett or I. We got you guys. And just make sure you go through the whole Discord, the community, and watch those videos. Okay. So we can obviously see, just like I said before, this is a level of resistance, right? So, but instead of drawing just one line, what we're going to do is we're going to go to the rectangle box and we're going to actually draw the highest wick point. So let me go ahead and delete this line right here. The highest wick point to the next lowest wick point. So if I draw from here to here, right? Or, from here to here and then release, right? You guys can see that this now is a zone, and it actually makes it a little bit more easier to identify and easier to read. Because if we just do one line here, right? Let me go back and just draw a line to this high point right here. And I'm going to make this line so it's not too invisible and make it red. What's giving you more data, the zone or one line? The zone. Now, how is this giving you more data? How is it going to obviously be easier to make a decision on what to trade? Because look, right, when we go into this, I always tell you guys, well, hey, wait for the closure above a key level. Well, now we can see, I'm actually going to draw another red line right here, okay? And I'm going to show you something real quick. So instead of drawing, just to confirm, a zone would be a high and low of the pre-market high. No, as I'll show you more examples. So it's not just the high and low of pre-market. No, you can draw zones anywhere, and I'll give you a lot more examples here. So we're really going to dive in. I'm just giving you the one zone here just to give you kind of a look of just how we're going to use this. But I'll show you more examples in a second. All right. But you can see, so we have one line. There's a miniature zone. This is technically, and some people call this a supply zone or a what? Resistance zone or a demand zone, okay? And what this does is it acts the same way as resistance, but it's helping you identify, hey, if we can stay and not break above the highest point of the zone, most likely we're going to sell off to the downside. And look at this. See how long it took? We touched here, we sold off. We touched here, we sold off. We touched here, we sold off. Look how many times it had to tap into that zone until we finally were able to what? Make a leg down. Right? Exactly. Super annoying. Okay, and actually I'm going to show you gold here in a second and show you how better price action. That's why I told you guys that gold is actually going to be maybe something we might be potentially trading as well. Okay. It's looking a little better, not gonna lie. Okay, but at the same time, this can help us get better entries, because if we're like, okay, well, hey, we're not able to break above this level. This is solid level resistance. So where would the next zone be for support? Well, it's obviously going to be at the low of pre-market. So how are we going to draw the zone down here? It's going to be this candle wick low to this next all these levels of support. And why we're doing this, because if I just drew a level here and then a level here, is that kind of confusing? Is that kind of annoying just having two lines right there, right? So instead, we're going to draw a zone, okay? So let me go ahead and get my zone tool. And this is, you guys are going to have to practice this, watch this video over and over again. But when I get this zone in here, look how much easier it is to read the market by just drawing two levels. That's all I drew, and we're on the 5-minute time frame. I'm gonna zoom in on the 2-minute to show you here in a second, and then let me put my my levels here in a second. I'll break this down for you here in a second. I'm gonna make these red, boom, and boom. Okay, cool. So now let me go to the 2-minute time frame, and let me break this down even more for you guys. Okay. Now, why was I so confident in taking a short down here when I was almost about to get stopped out and it finally went our direction? Why was I so confident this morning saying, hey, give it some time, right? And then I know some of us in here got stopped out, re-entered, got stopped out, re-entered, got stopped out, re-entered, which you're not supposed to do, okay? So these zones are going to make you have a true identification of where you put your stop loss. These zones are going to help you make sure that your bias is correct, and these zones are going to get you better entries. So let's break that down in 3 ways. How is this going to give us better stop losses? So for example, we're not throwing everything out the window that we already taught you, like trend, price action, key levels, right? But if we look on the 2-minute time frame, what happened? This is zone 1. Let's just label the top zone zone 1 and the bottom level zone 2. I drew these zones with not even having this data, right? I found out about these zones from this pre-market data and this pre-market data. And look how the markets reacted based off of these zones. So if I actually show you what happened, we wicked into this zone, and to help you guys kind of get a clear when should I enter or not on these levels, go ahead, when you guys draw these zones, get a trend line. You can color it purple, green, yellow, whatever you guys want, and go ahead and do what I did. Put a trend line at the top of the rectangle and the bottom base of the rectangle. The top of the rectangle and the bottom base of the rectangle, okay? And this is where your stop losses are going to be. So for example, right? Let's say we enter shorts on the bottom of this. So let me see if I can actually show you. I'm gonna make a circle. Okay. Let's say we enter, and I'm gonna make this. Let's make it pink. Okay. Let's say we entered right here on this bottom level here. Where should this zone is gonna tell you exactly where your stop loss should be. Where? If we close above the highest point of the zone, and I mean close. Don't put your stop loss at the highest point of the rectangle, because look what happened. You would have been wicked out. Okay, and this is the reason and how I was able to what? Hold the trade and not get stopped out, because I told you guys, if we get a closure above this level, then what's most likely going to happen? We're going to come back up to the upside. Where would you put it if it's not? So I would put it slightly. There's two ways to do it. Okay, you could wait for a candle closure. So for example, let's say this green candle shoots up and you can wait for it to close. So you wait 1 minute, because we're on the 1 minute time frame of the 2 minute, and you wait 1 to 2 minutes for the candle to close. Now the negative to that is if this candle decides to just shoot all the way up, we have a crazy candle, then your loss can be a lot bigger than you would want it to, right? Or what you can do is when it gets above here, right, you can then, instead of putting your stop loss right above the rectangle, put your stop loss the next previous candle high or a few points above the rectangle. So you don't actually put it right here. I'll possibly put it right here, and I'll make this, I don't know, let's do blue. So our stop loss can be here. Now the question is, can you hold a position if your entry's here and your stop loss is here? A lot of you guys, based upon your entry, can't have a loss or hold your position this long from here to here. It's too big of a loss for you, because you guys are still over leveraging, right? Now, if you guys went in light size, 3 MNQs, 2 MNQs, you can have hold it above this drawdown. And this actually gives us a chance to re-add. So for example, the trade that we took this morning, I went short right here. I was in drawdown. We came back down. We obviously crossed, added to our position, to our initial position. And there we go. Beautiful move. And what's really cool, and I'm going to go ahead and delete this level, this circle. Look what the market is showing us. We dump. We come back into this zone, and what are we forming? Lower lows and lower highs. And then we dump again. Every time we have a downtrend, guys, or even an uptrend, it's not going to be beautiful like, boom, red candle after red candle or green candle after green candle. There's things called retracements, and you guys that have been with me for a while should know this already. When the market, let's say we entered here, our take profit is all the way down here, just for an example. We might be, let's say our entry was here. Well, boom, we're in drawdown. Our entry's here. Boom, we're still in drawdown. And then finally it goes the way we want it to go. Okay? But in this specific trade, we would have been in drawdown 2 times before we would have hit our take profit. A lot of you guys freak out like, oh, we're red. Oh, we're red again. Because it's a psychology thing for 2 reasons. You're mental or you're over leveraging. And that's why position sizing is so crucial in trading. Especially prop firms, because you guys only have what, $2,000, $3,000 with a drawdown. Do you trail your stop after a couple candles? I don't trail my stop, but I do eventually do a break even. Correct, Alf. So I don't actually trail it, like I move it lower, lower, lower until it hits my take profit. But eventually, once we actually close below a zone, right? So for example, let's say we entered here, boom, boom, and now we finally truly close below the zone. Then I would go ahead and move to break even and then have the trade go its way. I never trail my stops. That doesn't mean you shouldn't or don't need to. But for how I trade, I don't do that. Now, to make sure you maximize the most amount of profit and make sure that you don't come all the way back up to break even, yeah, sure, trail it. But let's say you trailed it. Okay, we're in. Customer down stops drops right here, right? I'm going to zoom in. Let's say you started trailing it. Well, now you would have actually, let's say our full TP is right here, and you had trailed your stop. You would have trailed it, been stopped out. Yes, it would have been a profitable trade, but you just gave back. You gave so much profit on the table. So that's why I don't trail. Okay. And then you can see, look what happens. Let me show you something about how we could have identified this as a take profit. What do we have to do? bigger time frame. Now look, this is yesterday's lows. What are we going to do? The exact same thing. We're going to draw our zone, okay? How are we going to draw it? Let's get my rectangle tool. So there's two zones we can draw. We can go the lowest point, so the base, to the most recent candle high. So base to high, we draw it. Now, look what happened. Did we ever reach this zone? No, we did not. But there's another zone that we could have drawn. High to base. Boom, boom, right here. And there we go. Okay, there's another zone. Now, if we go back to the 2-minute time frame to now today's trading, again, is it going to be a perfect science? Is it going to be flawlessly like we're going to be able to get out on the perfect bottom wick? No, it's never a perfect thing at all, right? But the thing is, okay, that boom, we found our take profit right there, okay, and we're good to go. So now what are we going to do? We're good, all right? But when we go ahead and remove this, and now what we're going to look at is how do these zones affect the rest of the day? Look at this, right? We come back into this zone. What happens? Immediate rejection. We come back into this zone. What happens? Immediate rejection. But look what's changing now. And this is why trend is very important. What is happening? We have a floor, and we can start drawing our zones while the market's moving. Here's a zone, low to high, and see how, look what happens. We go into this zone, and now the top part of the rectangle is doing what? Acting as a support level, okay? And then we could actually even draw another zone from here to here. Now, we don't want to draw too many, okay? Yeah, go ahead. What's up, Scarlett?
How do you determine again, like the high point and the low point of the zone?
Yeah, good question. So what we want to do is pretty much think of support and resistance, but you're drawing two. So like if I delete these zones right here, it's still support and resistance. Resistance, resistance, resistance.
Okay.
Support, right? Right here, support, resistance, right? But I'm just drawing a zone instead of having all these lines. Okay.
Yeah, that makes sense.
Cool. Okay, cool. So let me go ahead and redraw those for you guys really quickly. And what it does is it actually cleans up your chart a little bit. So instead of having 15,000 levels on your, or 15,000 lines on your chart, we're just going to have clear, clean zones. Okay. And again, you don't want to draw too many, but you just want to draw enough to where what the market is currently doing. Okay. It is more clear. Exactly. So imagine having these three here. That's it. And that's all you trade off of. And obviously you can draw more when the market's doing its thing. Hold on. Okay. So now, let's just talk about the market. This is just today's price action. I'm going to show gold. I'm going to show other things. But let's just talk about the price action. Look what happens. Same thing with trend. We bounce. Now, I would not take a short here unless we close below this bottom rectangle. Did that ever happen? No, we wicked it. We never closed it. Now, look what happened. Buying pressure. Look at this. This is all key levels. Pushed up, closed above the highest point of this rectangle. And then what started happening? We started consolidating, right? And then volume started picking up. We closed above this high resistance level, the highest point of this rectangle. And what happened? We formed a higher low. So now we can then take our entry, and I'm going to perfect, somewhere in this area, right? And let me go ahead and make it red. So we take our trade somewhere in this area, right? Where should our stop loss be? Perfect question. Our stop loss initially can be the bottom of this zone. Now, again, if you guys do not position your stop losses correctly, you guys cannot have a trade when you're entered and stop here. You guys just can't. If you guys go in initially 5 MNQs or 1 mini or 2 minis, this is going to be $1,000 to $600 to $700 loss. But initially, when we initially put our stop loss at this level, the second the market starts saying, hey, Will, you're correct on your bias. hey, Will, the trend is correct, then what? We can then start slowly moving our stop loss from then bottom to rectangle to middle of rectangle to high of rectangle to break even. Okay? So for example, let's say we went in long right here, right? And let's say our take profit is what? Same exact thing. Our take profit could be now the highest point of this rectangle. And look how precise the market is touching these levels. Okay? Entry, exit, and again, we actually missed on even a bigger move, but this is still a massive move. Let me go to the 1 minute time frame. Right? Look at this. Entry, exit, that's over a 30-point move. Right there. Right? But look what happens again. We come right back down into the zone, right? And what happens? We form another higher low, acting as a support level, never closing below this high rectangle. And what is price doing? Continuing to the upside. And then what happens? Yeah, you could have entered again. Then what happens? We come back into this zone, but look, the bottom part of this rectangle is acting as a miniature level of resistance, which again, that's what happens. The market does that. And then we start shooting up higher. We close above this highest point, and look what happens with price. We now go to the next zone, and look what happens. Bottom rectangle acting as resistance, coming here, right? And now if I continue moving, price over, see how now this is now acting as a support level, right? Just off having 3 zones, okay? And this is just today's price action I'm giving an example on, okay? And so I think it's going to help you guys. Like, let's say, for an example, right? Let's say we want to enter break high here. We enter long here on highest rectangle. Where should our stop loss be? Initially bottom zone, right? And then once confirmation goes in our favor, then we start moving our stop loss higher and higher and higher. So let's say our take profit is right above the most recent high. Our entry is right here, right? So eventually when we have what green, oh, we come back down. Okay, let's see if we can hold above this. We hold above this zone. Price is now coming back up. Once we now get above, close above the initial candle we entered on, then we can start moving our stop loss closer to our entry, and there's another winning trade. And these are going to be able to give you bigger moves. So instead of just, if you guys are just getting 5-point moves, 7-point moves, that's nothing. Okay, you have to start targeting at least 15 points. And that's on the small side, okay, to be able to grow an account and grow it effectively. Now, let's show you guys gold. Let's do a gold example here, okay? Here's gold, okay? And gold's price action, this is what I saw today, would have been one of the biggest plays if we traded gold today, guys, which I am a little FOMO-y about, would have been one of the biggest plays I think we'd have caught together live. Look, very, very easy to read, okay? Higher time, let's go to 15-minute time frame. And these, being able to draw these zones, you don't need to go to a crazy time frame. You really don't. But if we do with the same thing that we did, right? We draw a resistance level. Let me get my rectangle out here. Okay. Boom. Boom. There's zone 1. Okay. Here's another zone. Okay. Look at this. I just drew 2 zones. That's it. Watch, and I'm going to go to the 5 minutes, see if we can draw any other ones. 2 minutes. Let me see if I can draw any other ones. Yep, I'll draw one more here. Okay. I drew 3 levels, 3 zones. Watch how price reacts. And I found all of these levels based upon pre-market data. Okay. Let's now see what the market does. Look what happens. Market opens. We smack right into a zone. Wouldn't be interested in any type of long position in gold unless what? We close above the highest point of the zone. Did that ever happen? No. Look what happens. We get rejected. What do we form? A higher low. Boom, boom, right? We then close below this zone. And now there's a few ways to actually trade this. There's not one way fits all. If you want to be more risk on, you could have entered the trade once we broke the bottom part of this zone. Our stop loss can be in 2 areas. Our stop loss can be in candle, the highest point of the day, or the highest point of the zone. And then once the market tells us we're correct, we move our stop loss closer and closer. If you want to be like, no, I don't want to enter here, cool. Then you just enter on the most recent higher low, which would be right here. So then you would gone short here. Now, let me take a break. If we entered short here, our stop loss could be here or here. If we entered short here, we don't want to put our stop loss all the way to here or here. We'd have to put our stop loss above the most lowest part of the zone. So then our stop loss would have to be close above here. So depending upon where you enter determines where your stop loss is going to be. Okay, and that's very crucial. Depending upon where you enter determines where your stop loss is going to be. All right, so, and look at that. What happens? We sell all the way off into zone 1. Take profit can be in 2 areas. Take profit can be on the top part of the rectangle or the bottom part of the rectangle. And look what happens. We then close below this rectangle, which is a support level. What happens? We come right back up into the zone, acting as a resistance level. What happens? We continue selling off. Okay, same thing with this. Look what happens. We sell off. Do we ever close below the bottom part of this zone? No, not at all. And look what happens. Price comes all the way back up, retests this zone, and then we start selling off, forming another higher low, and selling off. See how these zones are going to help you guys be able to hold your trades longer? But the thing is, if you do not control your position sizing and you over leverage, you will not be able to hold trades. So for example, let's say we went in short at the break here, right? We're in short. Let's say our take profit is this key level right here. Let's say our take profit's right here. Okay? If we entered short here and our stop loss, where should our initial stop loss be? Highest point of here. So I'm going to put my stop loss just above the zone, right? And let me make it red. Okay, stop loss is right here. Our entry is, I'm going to make this green. Okay, or no, it's fine. Entry here, stop loss here. Now we're in, we're green, yay, 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 yay. A lot of you guys already would put your break even when we're down here. Oh my gosh, we're break even, let's go. What happens? You guys get stopped out of the trade. But all that's happening is it's just retracing again to make a dump to the downside. So if we put our stop loss here, look what happens. We're green, we're green, we're green. Yes. It comes all the way back up. Oh my gosh, we're red. Screw it, screw it, screw it. Yes, we got close to our stop loss. It could have been pretty annoying. But if we just follow the key levels, look what happens. We never close above it. Then we take the dump. Our take profit hits beautifully. And actually continue selling off. But again, that's still a beautiful what? How many points is that? 2 gold contracts? Boom, that would have been like a 1,000-point move. Easy. Okay. So that's gold. And you can actually see, look what happens later in the day. We actually come back into this zone. And now it's acting as resistance. Now it's holding above resistance. Price comes back up, acting as support. Close back down, then acting as support, and then coming right back up. So you guys have to be focusing on the highest point of the rectangle and the lowest point of the rectangle. Okay. Oh, I trade minis. Now it depends upon your drawdown. All right. If you do not have enough drawdown in your account, nobody should be trading minis. If you guys have less than $3,000 in your account, nobody should be trading minis. Okay. When should we start putting our stop loss to break even? Once we truly understand that we're out of the zone. So for example, if we entered short here, right, I wouldn't move my stop loss until we are, and take profits here, until we're trading almost pretty much to break even. I usually want to be at almost, or not break even, excuse me, almost to take profit. Because lately, especially with NQ, we've been wicky. So how many times have you guys got stopped out of a trade and then it finally went in your direction, and then you immediately re-enter, and then you're all over the place, and then it's just disgusting. But why? Yeah, exactly. But why are you guys doing that? Because again, you're over leveraging your hand, and when you over leverage your hand, right, then that makes you guys have tighter stops. But you're just putting a tighter stop because of your leverage, not because the market says move your stop. You just move your stop because you're in too heavy. So this whole system I just showed you tonight is not going to work unless you control your leverage. If your leverage isn't controlled, no matter how well you draw these zones or how well you read these zones, it's just not going to work, because when you get into drawdown, you're not able to hold the trade, and then you turn red and you have to kill it. just because you went in too heavy and just because you lose too much money, right? And then you get angry, revenge trade, and then before you know it, the account's gone. Just because of one simple little thing, over leveraging. Okay. Let me show you one more example. Exactly, right? Let me show you another example on NQ here. And we're going to go to yesterday. Okay. What are we going to do? And what's really cool as well is, let's say it's 10:30 in the afternoon, or sorry, in the morning, right? And we're making new levels. We can draw new zones while the market's moving. So let's say, for example, we're currently right here. Price is right smack right here. So let's say ignore all of this and pretend like we have this candle and over. Okay. So what are we going to do? We're going to do our same thing. Draw our zones. What is this? Highest point of day. Boom. There's zone 1. Zone 2. Okay. And what else? What other zones can we draw? That makes sense here. All right. So from this point, we have 3 new zones, right? Clearly, this is a level of resistance. This is a level of support. This is a level of support. Okay. And let's see if we can actually draw one more on pre-market here. Hold on. Let me see. Because I'm actually drawing these while I'm actually teaching you guys. Okay, there you go. Now, look at this. I didn't find this zone from right here. I found this zone from pre-market. Okay. So look what happens with today, right? Let's say we're trading right here, right? And what could we could have done? And that's why I caught, this is literally the trade I caught yesterday that made me $3,000. Okay. I took it because what happened? We got rejected. We closed below this neck. We closed below the top of the rectangle. And then so what we could have done is, if we closed below the top of this rectangle, we could have gone short, right? Where would our stop loss be? Just high of the candle. Now our stop loss should be high of this candle because why? If we decided to go in short at the break low here, well, the most realistic thing, we don't want to put our stop loss all the way up to the next zone. That's way too big of a stop. So in this specific trade, I'll have to redraw that zone real quick, but it's fine. In this specific trade, our stop loss should just be right here if our entry's here. Now, if our entry was here on this break, where would our stop loss be? The closure above this zone, right? And look what happens. Goes all the way down to take profit, this next zone. And then what happens? We draw the next zone after that. We sell all the way back off perfectly to the next zone that I just drew in pre-market. Okay? And you can see what happens. Acting as resistance, slowly being choppy, consolidation, formed that lower high, dumped all the way down to zone 1, or the zone 3. And then what happens? We start consolidating. We shoot up. We close above. Again, I'm not changing my zones above this zone. We come back up, we retest it, we form that higher low, take a trade somewhere in this area, and where should our take profit be? The next zone, TP1, TP2, and then obviously we can target this zone up here, TP3. And so I think this is really going to help you guys hold trades longer, go in, because again, if you guys are targeting bigger moves, you guys don't need to go in heavier. Because if you're targeting bigger moves, we don't need to go in like crazy position sizes and then be absolutely crazy. Really good. Yes, it's being recorded. Should we try to draw zones tomorrow morning instead of key levels? Yeah, I'm going to draw zones tomorrow morning for you guys to help you guys out as well. I'm going to draw zones tomorrow morning. So, I mean, I have zones on my other charts. Again, you guys only see one chart when I live trade. I have like 6 other charts on my screen at once while I'm trading. I have the Discord, 6 charts, and then my DOM. So I've always been using zones, but when I was thinking about what lesson to do for you guys, and I'm like, what can I do to help you guys better manage your position? What can I do to help you guys better manage your trade, your position sizing, all that stuff? And it came down to, you know what? Let's throw away lines, even though they work, and let's just start making zones. So I think it will help you guys be able to know when to get out of a trade and when to enter a trade. When will we start trading gold? Go ahead, Scarlett. You have a question?
Yeah. What drawing tool do you use again to draw the zone?
Yeah, so for Thinkorswim, this is Thinkorswim, you just go to, obviously, to draw the lines, you have that money sign right here. But to draw the zone, it's just this rectangle. It's just a rectangle. So if you go 1, 2, 3, 4, 5 down, it's the rectangle tool.
Cool. We'll try it tomorrow morning before you log in,
Okay,
see
cool.
if match your zones.
No,
That's
definitely.
pretty helpful. Thank you.
No, of course. I think it will help you guys manage your trade a lot better. When will we start trading gold? It really depends. Like when we go log in the morning, I'm gonna have gold and NQ pulled up, and I will see what looks good. Like if I'm looking at gold, I'm like, oh my goodness, gold's looking really. We're just gonna have to be. You guys might have to just we have to switch back and forth from gold to NQ, and then as well, how Scarlet kind of look at him as well. And then you guys can manage both of them too. Say, hey, Will, gold's looking good. Let's hop on over there. Okay, Cake, let's take a look. Is there a good trade? Let's take it. So it's more of just looking to see if the opportunity is there between gold and NQ, and if one opportunity is better than the other, we'll just switch. Okay. Can you please go over how to enable on demand on Thinkorswim? I don't see it. Yeah, so on demand is going to be the top corner. If you just click on demand, boom, now you're in on demand. Now you can see that it's the orange. Now, again, to change the date, see the top, like very top here, it has August 18th. Now I'm actually in August. If you click on that, you can pick any date you want at all. So for example, if we can go to, let's go to August 2015. So when I was 14 years old, we can go and press go. And now we can look at price action when I was 14. So I was at 2015. And that's how you do it. Now this is what happened on NQ 10 years ago, or whatever the math is, 9 years ago. Right? Buy Bitcoin. All right? So exactly. There you go. I hope that kind of answered your question, Ian. Do you wait for a retest or enter right at the break of the key level? So that, again, good question. So it really depends upon the market. Let me go back to NQ. So for example, let's talk about today's price action, right? Let's get our zones in here. Okay. Right? So let's say we're going in here. We want to, obviously, there's two ways. Like for this short opportunity here, there's two ways to even play this short. Okay? There's two ways to play this short. Now, how is there two ways to play this short? We could have gone in early and entered on the high break of the rectangle. Now, if we entered on the high break short on this rectangle, where would the most realistic stop loss be? 50% of the previous candle. Okay. Now, if we said, you know what, Will, I want to wait till we get below this key level. Now, if you wait for candle closure, then your entry would have to be here. And if we wait for candle closure and our entries here, our whole stop loss is messed up, right? So, for example, we want to be able to enter here, and then where would our stop loss be? Obviously above this high right there, right? And we'll be good to go. Okay. So now you said, should we wait for the break and retest? You could. Let's say you don't want to take the break, right? And you say, you know what? I'm going to have it break and then retest it, right? Back to go lesson. All right, hold on. Let me fix that real quick. I don't know why she can't. Give me like 5 seconds, guys. Here, hold on. All right. Can you DM her real quick, Scarlett, and say she's good to go, and just say apologize because it was during lesson. Okay, cool. So now, obviously, what if you said, hey, I want to wait for the break and retest, right? Cool. You could have done that. We broke. We retested. There's the retest. And then we continue. So there's two ways to play the trade. And now which one's better? It depends upon what you're trying to look for. If you go into the market saying, I'm only going to play break and retests, right? Then you wouldn't be taking these trades because there is no break and retest. Now, if you go into, then if that's the case, then, oh, break and retest happened, let's take it. Now, if you're going into the market saying, you know what, I'm going to play the break of the zones, then you could have taken the breaks here. Okay. So there's two ways. Again, that's why trading can be very complicated and confusing to a lot of individuals. Because it's like, well, Will, which one do I do? Which one makes more sense to you? Which one is obviously easier on your stop loss? And which one is easier for you to visually see? If you love seeing break and retest plays, cool. Only play break and retest plays. Okay. For example, here, right? What happens? We break this level. Did we ever come back down to retest this? No. So would you have ever taken this long? No, because your game plan is break and retest. Now, if your game plan is like, okay, I'm going to go long once we break the highest point here, that's your game plan. You follow it. Are you guys following me? So it all depends upon what makes sense to you. Okay. Now, a lot of you guys would be like, okay, here we break. Oh, here's the retest. And then you try to take a short. But the problem with that, though, right, is that you're missing all of this data down here. Okay. So I don't really like truly playing break and retests. I only use break and retest for two things: extra confirmation and potential re-adding bigger position sizes. So for example, if I go short on the trade we went today, I would have gone on the break short. And let's say I would take profits all the way down here. I got out earlier than this, but let's say I take profits all the way down here. Well, seeing this retest would confirm, since I'm already in the trade, to then if we break back below here, I can just add heavier to my position. So for me, I only use break and retest to potential add. That's how I trade. That's how my strategy. Go ahead, Scarlett.
On that trade right there, you entered where the red line is, right?
I entered on right here on the, let me show you, on the green line. I'm about to make a green line. I entered here. And that's why a lot of it, I told you guys, hey, I'm about to get stopped out. I'm about to get stopped out. I haven't told you guys this, but I never did because, again, we never closed below the zone. And then our trade happened. And then actually I killed the trade at this low here. Right?
Okay,
That
I
was a trade
definitely
this
got
morning.
stopped out.
Yep, I know.
definitely
Yeah,
got stopped
because our
out in
entry's
that
here.
trade.
So this drawdown, look how close we were to getting stopped out. This drawdown, you got, and that's why position sizing is so important. Because if we entered here, okay, cool, we're green, we're green, we're green. Now we come back up. Oh my goodness, we're red, we're red, red. And now again, this would have been a massive trade. Now, for example, let me show you guys how much you'd have lost, just so you guys can put this in perspective. If you just went in one mini, right, from entries at 25, 572, and then our stop loss is at 25,599. That's a 27-point stop loss. So one mini is 20 points, so 20 times 27. That would have been a $540 loss off of one mini. If that's too much for you, nobody should be trading one mini. And that's just one mini. Two minis, just times that by two. If you were in two minis, that would have been a $1,000 loss. Okay? 5 micros would be math times 20 times 5 times 27. If you were in 5 micros, that'll be a $337 loss. Okay? See the difference?
So like on
Yep, go ahead.
so like on days like today, like PA in my opinion was terrible because the candles kept flipping and then we had
Wiki,
long
yeah.
wicks. Yeah. So I don't do good during this type of PA because I set my stop loss too tight. So it's a given. Like I'm gonna get stopped out.
Mm-hmm.
I just and then you mentioned something about waiting for extra confirmation or waiting for confirmation. So like if I entered where your green line is and then my I would have set my stop at the white line, what confirmation I don't know. Should I have I don't what do you mean by like waiting for an additional confirmation? Like what more confirmation did I need to enter the trade correctly?
So I mean, for this trade to go short here, there was like that's why I went in half. So like every single time I enter a trade, I never go in full size because again, this is enough confirmation for me to enter, right? But when I say wait for more confirmation, that's meaning to add heavier to the trade. So I was already in the trade, I was in drawdown, right? So
Oh.
this was enough confirmation. But when I say, hey, let's see if we can add more to our position, that's what I added to the position. Once I saw this close below the zone and form that lower high, that's more confirmation for me to then add heavier to my size. I think a lot of you guys in here are, when you guys take positions, you guys crazy over leverage. Because when I see you guys take positions, I see you guys make one, two, three, like $1,000+ on prop firms, and I'm like, guys, I made the same amount of money as you guys, but I have crazy drawdown. So I'm like, it's cool that we're making that money. But the second we lose a trade, I have a feeling that a lot of you guys are going to be like super close to blowing accounts. Okay? Because what you guys are doing is you guys are going in, let's say, I don't know, one mini, 6 MNQs here, and you guys are in drawdown by $600-$700, and you guys kill it because, but if you guys have already gone in, let's say you guys would have said, you know what, half size, 2, 3 micros, right? If you went in 3 MNQs, right? 3 MNQs, let me do math here real quick, times 3 times 27. If you went in 3 MNQs right here, at the highest point here, you would have been down $200. Now look what happens. Once we get that extra confirmation and we come back down and we enter, now let's say we enter another 3. So now we're in 6 MNQs. So now, right, let me do some math real quick. We enter 6 MNQs, and let's say our take profit is right below this low here. Right below here. So let's say, now let's see how much we'd have made. We risked $200. We re-added when we got more confirmation. And now let me do math real quick. And we got to re-add on a point. That's why I love retracements, because a lot of you guys hate retracements. Oh my gosh, we're back to red. I love retracements because it gives me a second to add to my position. If we enter a trade and it immediately goes missile to the floor, yay, cool. We never were in drawdown. We made money, but I made money on such a light position, which still for me would be a few $100s because I'm trading minis. But for you guys, I can see why you guys want to keep trading, because you might have only made like 80, 90 bucks, depending upon what your half size is. Okay. So if I would have yeah, go ahead. What's up?
Sorry, did you set a hard stop at the beginning of the trade?
I didn't. No, not until. So I didn't have a hard stop, but I did have. I always am aware of when I am going to put my stop loss. So I had a mental stop here, right? So if I never usually like, for me personally, I recommend a lot of new traders put hard stops in place, because 1, you don't have the drawdown, and 2, you're still learning. For me, I don't have mental stops. Hard stops, just in case like we get some weird price action in wicks. But I'm okay with that, because if I don't have hard stops, I am risking more P&L. Because let's say out of nowhere, boom, we get insane volume. Instead of having a hard stop here and it just shoots all the way up, I would have lost a lot more than I would have wanted to. Everybody in the beginning, until you guys are profitable and get payouts, should have hard stops. I'll be honest, I don't. But I, again, can do that. But I recommend having hard stops is the fast question. Okay.
Yeah, so I think what I did wrong, like on days like today, I should have gone like I should have probably 5 MNQ or something.
Exactly. That's what I'm saying, position sizing. Because I would rather you guys go in light and make money on a light position than go in heavy and lose money on a massive position. Because then there's always an opportunity, maybe not this first trade or the second trade, but there's always an opportunity to be able to add more to your position. Okay.
Yeah, we have to be quick at identifying like whether PA is good or bad, right? As soon as market opens.
Yeah,
so
exactly.
We know how. Yeah.
Exactly. So that's why I'm trying. Exactly. That's what I'm saying for here. If we went in half size, got that retracement, got more confirmation, then added again, you guys would have been again risking $200 on the trade, 3 MNQs, and then we added 3. So now let me do quick math. Times 6. And then, okay, that's 15. And then how many points is this? 25535 minus entry was up here. 25583. So that'll be a 40. So we're risking 27 points to make 48 points. And since we re-added, that would have been 15 times 47. So now you're risking $200 to when you re-add, you just made $705 on 6 MNQ contracts. 6, not even 1 mini. And that would have been a $707 move to your favor, only risking a max of $200. Now, once you would have re-added to this position, then we have to now start managing our stop loss and then move it to the highest point of the rectangle because we added more leverage, right? So just in case it does come right back up, it's still only risking $200 because we moved our stop closer, right? So now we're risking $200 to make $700. That's a good ROR. But initially, we're going in half size because we have to protect our capital just in case the trade wants to be weird. And that's why a lot of you guys aren't going in light the first trade. That's why I tell you guys, going in light. One of it, I don't know if it was yesterday or Monday, right? I made on one of the trades $257 because I never was able to re-add to the position, right? But I took it. It was a winning trade. Okay. Well, you have any questions, Scarlett? What is your recommendation on the 150K with MAQ? 150K, I would say half size, like 4 MNQs, full size 8 to 9, until you work on your buffer, guys, right? Until you work on your buffer. Yeah, $4,500 is amazing drawdown, but our goal, and again, at the same time, yeah, the profit target is $9,000, but on one trade, if you manage it correctly, that's $700 right there, trading micros. That's almost, like, again, 9,000. That's pretty much, let's say it takes you 9 days. You make $1,000 a day. 9 days, you pass the account. Trading not even 1 mini. You guys see what I'm trying to say? And you guys are controlling your risk. And it's less than a month. 9 days, guys. That's like 2 weeks. And think about it. 2 weeks to make $9,000, right? Do you guys realize that? In 2 weeks, now again, I know it's sim, but let's say you get funded, 2 weeks, 9 grand, 1,000 a day, give or take, right? Now let's say you do that for a whole month, right? That's $18,000 a month, guys, give or take, again, with prop firms, taxes, profit splits, and all that other stuff. So let's take maybe 4K off of that. You're walking with like $13,000, $14,000 a month with $1,000 a day. So again, I think you guys, when you see the 150Ks trading up to 15 minis, 150 micros, you get excited and trigger happy. But that's what prop firms want you to do, because they want you to blow the account, so you guys buy more accounts, and then you guys are bleeding dry. But if you guys just realize this is in for the long haul, and you guys just go in lights, play it smart, small profits add up over time. $500 a day adds up over time. Okay. I'm good. I still gonna get count for the giveaway. Tonight's the last day to get an account. So if you guys want to be a part of the giveaway and potentially win up to 1.5K for first place, I think I'm gonna do smaller second and third place prizes. I haven't made my mind up on how much those prizes are gonna be. I think third place will get like 6 months for free in the Discord, and then second place might get like a smaller cash prize, and then first place will be like 1.5K. And I'll just literally just cash out whoever wins. But again, today is the last day to get that. So to be able to enter, you have to buy a 150K account using my promo link. Send me a screenshot. You're in the giveaway, and you'll be in there. Now, again, the really cool thing is if you blow your account, boom, you're out. Like, it's over with until I do another giveaway. But if you guys are smart and get maybe 2 or 3 150Ks, you're stupid on one of them, you still have 2 more chances in the giveaway to get the thing, right? Plus, if you win the giveaway, you get a payout. You get 1.5K from me, and then you get money from the prop firm. It's pretty sweet. So, last chance today to get in the giveaway. And the challenge is going to go all the way till December 1st. So you guys have 2.5 full weeks of trading to get a payout. Okay? 2.5 weeks of full trading. Meaning, actually, you know what? Just to even make it better, I'll do the December 8th. Because if you guys average $1,000 a day, it'll take you 2 weeks to hit 9K. I'll give you till December 8th. Okay? December 8th is the deadline of the giveaway. Okay? Sorry, I missed what you said about how many. I would say 4 to 8 MNQs until you build up your buffer. 20 contracts is way too much initially. So I'm saying my 150K is light, 2 to 3, half is 4, max is 8. Yep, correct. On 150K, correct. Again, because guys, exactly. Because again, $1,000 a day, which is super doable with micros. Okay, even $700 a day, you'll pass the account in 9 days minimum. Well, let's say you have an insane trading day, you make 1.52K, boom, you're chilling. Okay, so again, don't try to pass and make 9 grand in 3 days. And TPT makes you trade at least 5 days before you pass, which that's why I love them. They make you slow down. Top step you can pass in 2 days, but again, that makes you force trades and all that stuff. So I kind of like how that makes you trade for 5 days. Okay. But again, this is recorded. I'm going to post this probably later this evening. Any other last minute questions for me? In the future lessons, I'll be going over more examples of stuff for zones. Go ahead, Scarlett.
Yeah, can we go over how to calculate points some other time?
Yeah. Actually, I can do a quick. I can tell you points real quick, but we'll go over it in more depth in the next lesson. But points, so every 1 point is 20. So one NQ contract, right? Every point. So if it goes 25,644, 25,645, it's 1 point. That's $20 in or against your favor on one NQ. Now, MNQ is $2.50 per point. Okay, and that's why, again, 10 MNQs represents 1 NQ. Okay, and you go from there.
Okay, sorry, one more time. What is considered 1 point? Sorry, my dog.
No, your 1 point is just 25. Again, 1 point is just one move, so 25.6. So the price is at 25.663. If it goes to 25.664, that's 1 point. It's one move. Okay. And then 25.664 goes to 25.665. That's another point. And you guys can see that trade that I showed to you guys was 47 points. So you can see how much you win or lose per trade. So cool, but I'll go into that more in next lesson, okay? Other than that, that's it for me, guys. Okay, I will post a recording later tonight. If you guys have more questions, please reach out to me. Again, last day to enter the giveaway challenge. Okay, if you guys want to get in, I would highly recommend getting in today. So 12 midnight tonight, it's over. Nobody can get in unless okay. So cool. Other than that, you guys have a beautiful rest of you guys' night. I'll go over more examples every single day. Hope you guys learned something. I'll post a recording. Bax, again, sorry that you're late. I think she left. But anyways, I'll see you guys tomorrow morning, live trading, 8 a.m. Let's have a good one. Stay smart, stay green, and ask questions. And welcome to the team if you have any new people in here. Peace out, team. And I'll see you guys tomorrow morning.